Folks, and we are live. Welcome to tonight's Stock Charts Live. What we're going to talk about tonight are obviously the futures. We're going to go through some headlines that came out over the weekend, how they may impact the market. We're going to talk about economic data, earnings, and ultimately, in the end, we're going to talk about, was Friday the bottom? What do you think? Leave a comment, give your thoughts, and let's get this going. Let's say hello to people while we let the futures settle down. We have the Nasdaq up top, the Nasdaq 100. Lower left, we have the 10-year yield, the dollar, center lower, and the VIX. So out of the gate, we're seeing some buying of equities, fear coming out of the market. Let's say hello. Falcon, hey, brother. Seymour Rivers, hello, sir. Hope everybody's enjoying their weekend. I mean, the weather here in New York was outstanding, so I hope you have the same weather wherever you are. And let's do this. Buster Stacks. Hey, brother, good to see you. RL, top of the afternoon to you. Trader Isaac, I was thinking about you. We're going to talk about wheat tonight. I'm a contrarian. I have a lot to talk about with regard to commodities. I am concerned about commodities. I'm going to go over the charts in a moment. Zachy, hello, my friend. Welcome. Three elements of good trading: cutting losses, and cutting losses. Very true. And if you're trading options, managing winners, manage your winners. Meaning when you're a seller of premium. Rainy in Tampa. Sorry to hear that, man. Talon, welcome, brother. I know I saw Lewis up here. Lewis, happy Sunday to you, my friend. Letting people populate. Futures are up on the Nasdaq about 0.5% and rising. This is a strong open. FOMC minutes on Wednesday. All right, let's talk about futures. All right, so the opening glance here is that you clearly have volatility coming in down here and equities continuing that follow through from Friday. The question is, do we close there? Now I'm going to be setting up a series of alerts here. I just want to create some support levels. Let's go to the big chart. Danny, hello, my friend. Franklin, evening, Bob. Hope everyone had a great weekend. Same to you, my friend. Paul, hello. Top of the afternoon to you. Okay, this is a weekly chart. Let's scroll down. I'm on VIX. Let's take a look at the VIX. 30-minute chart. Obviously, a continuation breakdown here. Really weak. Really, really weak. 15-minute chart. Let's take a look at the S&P 500. S&P 500 is up spot 62%. Okay. Let's pull back to a 30-minute view again. Check back in with the Nasdaq 100. It has gained more momentum since we last checked in. We're going to be nearing some resistance here. Okay. Where's the Russell? Here we go. Russell 2000 up nearly 0.6%. Looking very good. Strong open. Very strong open. Checking back in with the yields. Watch these yields. This is the 10-year yield. The dollar. Let's go to the big chart on the dollar. Dollar is weak. Fractionally. Since we're on the topic of the dollar, let's go to gold. Gold. Wow. What a rip up higher here. It pulled back off of the high. It hit resistance. Let's see if we take out that high. We're up just over a third of a percentage point. Let's see if silver's following suit. Silver up 0.6% off of its highs. Very good. Good stuff here. Good opening. Let's stick with the commodity trade. I teased this earlier with Trader Isaac. I'm going to go over some articles that are coming fast and furious about food shortages, baby formula shortages, like fear, more and more fear. I think that my contrarian antenna are up, and I'm smelling a head fake breakout on commodities. Taking a look at nat gas coming in slightly, that's down a half percentage point. But I want to focus with commodities on the weekly charts. Take note of how, yes, we were up last week, but we are not breaking out on natural gas. We've really just been consolidating in this range. So the reason why I'm going to talk about commodities quite a bit tonight is that we have the Fed minutes coming out this week. We have the Pce Inflation Indicator coming out on Friday. That is the Federal Reserve's main index for inflation, not the CPI, not the PPI, the PCE. That's coming out on Friday. So we're hearing a lot about inflation of late. I have changed my tune on inflation a little bit. I think that we're seeing demand destruction in the economy. Gas prices are going up higher. You take a look at oil. Oil's still strong. I'm not going to say that it's not. Very strong. But do we have a potential? Potential. I am not calling a top on oil. Potential double top here. Maybe. Just maybe. And the reason why I'm a little bit bearish on oil, I wouldn't short it yet, is that I'm taking a look at derivatives, distillates, home heating oil. Home heating oil has been down for the past couple of weeks, where oil prices have been consolidating. So the prices are coming in on home heating oil and not moving much on crude, not moving much on nat gas. Still elevated year over year, no doubt about it. Taking a look at cattle, we're going to stick with the weekly chart here. We have been trading down on protein for the past 3 weeks. I don't think this includes this week. Yeah, this is as of the 16th. So this week hasn't opened yet on the weekly chart. Moving on to corn. Look at corn. This is as of last week. We broke down last week. Let's drill down. We tried to break out. We were rejected. You had a breakout point failure here. I think that corn, I'm going to go to a higher level view chart, a quarterly chart and a monthly chart of corn, wheat, soybeans in a minute. Stick with me because there's more to talk about here from a higher level view. Soybeans, they're looking good. They're looking good. This is as of last week. This is not reflective of this week's price action yet. Again, this is a weekly chart. Wheat broke out the week prior to last week. It's a bearish key reversal, but it could easily be a retest of the breakout point. So I would keep a close eye on it. And I'm going to go to a couple of charts again in a few moments of the quarterly and monthly chart of wheat, corn, soybeans. You're going to be a bit surprised to see how overbought these things really, really are. So stick around and smash the like button. I remembered it by myself to remind you of that. Zaki, do you think the recent COVID surge and monkeypox news will cause short-term tech rally in summer? If they start talking about lockdowns, you're going to see ARK start ripping up. They're probably going to. They're going to try. I mean, the Democratic Party is set to get annihilated. Even the rhinos, they had the rhino Republicans in Idaho. They were annihilated in the state legislature. The rhinos were kicked out. Hi, Bob. I saw Charles Nenner mentioned the shortage on everything. Gold 2,500 to 4,000 an ounce in 5 years. Okay, I don't disagree with that. I think that gold is definitely going to go up higher. The Manic of Dixie is over, and no choice but Nugget. Bingo. Hey, Tom. Does PCE account for energy and rent? I'm not sure how the makeup is. I believe rent is in there, but they don't use. They use owner's equivalent rent. It's not the same as doing a survey of landlords. How much are you raising prices on rent? They don't do that. They do a survey of homeowners. How much do you think you can get for rent on your house? It's really stupid. So, of course, PCE, CPI, understate inflation. I've always said that. CPI is what, 8.6% year over year? It's probably double that in reality if you calculate in rents. And they have hedonic adjustments that they didn't use back in the 80s and the 70s. A hedonic adjustment is, okay, beef prices doubled. Pork prices only went up by 25%. People will go from beef to pork. Therefore, we don't have that big of an inflation rate. That's a hedonic adjustment. It's insanity. Time to load up on wheat again versus Friday's lows. Could start to handle on daily. I'm not saying you're wrong. I think that the charts look good on a weekly time frame, but you check out the monthly and quarterly charts on all those names. 250 in oil. Well, God bless us all. We see 250 oil. Trader Isaac, I agree on wheat. Comments on reports news. Yeah, Paul, thank you for the like, my friend. Appreciate it. Wheat, tough trader, though. Very volatile. Pete, Harry Dent says gold will go. He's been saying that for years. I think he's got a screw loose. I've been listening to Harry. I actually stopped listening to him. I'm surprised he's still going with that $900 call. I disagreed with him 5 years ago when he was making that call. Since then, gold has hit new all-time highs. So, uh, the economic environment is just not siding with Harry's call there. Is it going to go to 3,000, 5,000? I think it'll go to 3,000 to 5,000 before it goes to 900. All right, let's get back to the futures. Are we settling in here? VIX is still weak. Dollar giving up more real estate. No breakout yet on yields, but that could occur. Although I think yields are probably going to stay dormant because you're seeing money move into bonds. Now, if we see a rally in equities, you may see yields spike up higher. That means that money's coming out of bonds, going into equities, and that'll drive yields up. And that'll put a cap on growth stock rally, meaning those ARK fund stocks, they've been beaten to death, but a 10-year yield over 3% is not going to do good for them. Andy Smith said $100 an ounce in 1999. Andy and Harry are twin jokers. Okay. Okay. Let's did I go over everything? I think I did. I think here's a Bloomberg commodity index. That's not doing anything. Okay. Let's go to the new trading week economic data. Nothing coming out tomorrow. That's going to allow for a market rally. We do have some earnings reports coming out, not huge. On Tuesday, PMIs. You're going to get the U.S. global manufacturing PMI. That's the Purchasing Managers Index. Any read above 50 is a sign of expansion. Any read below 50 is a sign of contraction. Markets expecting 58. Services PMI also coming out on Tuesday. Again, any read below 50 is a sign of contraction. Anything above, expansion. Durable goods, huge number. Then we get FOMC minutes. That's at 2 p.m. on Wednesday. Thursday, initial jobless claims. Folks, this number has been ticking up. We were down with a one handle, 150,000 initial jobless claims a few weeks ago. We stayed down there for a few weeks. Now we are picking up. GDP, we're going to get the revision for Q1. That should be interesting. Remember, we had a negative read on the first announcement of GDP. We'll see whether or not that changes on Friday. This is where the rubber is going to meet the road. The Pce Inflation Index. Now, I'm seeing a core number here, so I forget who asked about, does this number include food and energy? Excuse me, not food and energy. Rent and energy was the question. They're probably going to take energy out and they'll look at the core. So energy is going to be in the headline number. Unless they take that out. Real disposable income. This is really going to be a pulse check on the consumer. I have some data that I'm going to go over in a moment showing that the consumer is beginning to buckle. You have inflation, which is outpacing wage gains. You're seeing people take up second jobs now. That is on the uptick. UMIS Consumer Sentiment Index. So a lot of data coming out this week that can move the market. Now, we've had a lot of damage done in stocks, but week over week, the PE really hasn't changed any. But the one positive bit of news here is that the Buffett indicator, I've been doing this show for about 2 years now. This is the first time that I have seen the Buffett indicators say stocks are fairly valued. The however is, folks, is that on a historical basis, we remain 29% overvalued and far away from historical trend. We're in a bear market. The S&P 500 may not be in quote unquote bear market territory, but it's in a bear market. And the resolution to a bear market is the pendulum swinging from extreme overvalued to extreme undervalued or undervalued. And we haven't reached that point yet. So I'm not of the opinion that equities are done going down. Can we get a counter trend rally? Sure, absolutely. When you rally off of the lows by the Qs were down 3% at one point in time on Friday. They rallied down to being down only a third of a percent. When you get that kind of a rally, that freaks out shorts. So they covered, and you may get some follow through this week. Earnings, Zoom. Now, I'm not going to be doing any earnings trades. We have a moratorium on trading options on earnings trades because of the crazy environment that we find ourselves in. When John Deere, which is a super low beta stock, drops 20% in a day, I'm not going to be trading those options anytime soon because we're premium sellers. We sell. We don't buy the options. We're the bank. We're the casino. So Zoom announces, Advanced Auto Parts. These are names that I would have normally, not necessarily Zoom, it's too volatile, normally traded. Intuit reports. NVIDIA, I would definitely have traded that one. But I'm not going to be doing it this quarter. Costco, I would have traded that one. So this doesn't mean that simply because we're not going to sell the options before earnings doesn't mean that we're not going to sell the options after earnings. So we'll still trade earnings, but after. If we see an opportunity, a big move, a 2-3 standard deviation move on some of these stocks, well, there's opportunity there. The volatility is going to go through the roof, and that's our opportunity to pounce. So there is still opportunity to trade earnings without having all that risk of getting into the trade before earnings. All right, so this has already been brought up. Monkeypox, fear porn. So get afraid. This is the new fear porn being pushed by the globalists. Get afraid. Monkeypox is here. Lockdown, quarantine. So get ready. This is only going to get hotter. How they calculate these numbers, I have no idea. They won't tell you how they calculate these numbers. They're not going to tell you anything unless it suits their narrative. Buckle up. Because remember, the Democrats, the globalists, they need this. They need mail-in balloting. They need drop boxes to steal the next election because they're about to get wiped out. We've already seen it in primaries. They're going to get wiped out. Negative for equities. Profits and margins plunge in Q1. Expect more margin contraction as Fed squeezes inflation. So as I come back to this, folks, this was unchanged week over week, the Shiller PE ratio. Why? Earnings are coming in. And next quarter, this could actually, even if stocks stay the same or go down slightly from here, next quarter, if earnings don't improve, this moves higher, stocks get more expensive, even though they haven't made any gains. After scrounging the labor during the pandemic, Amazon and Walmart now have too many workers. Expect layoffs. They're coming. Economic indicators led by mortgage rates are flashing red. Here, so you have growth. This is what's going to be outstanding for gold. If you've never heard of the word of stagflation, this is stagflation. economic growth, it's actually negative now, negative, where you have inflation still on a tear. There is no single better environment for gold, silver, the gold miners and the silver miners than this environment right now. Stagflation. You saw it in the 70s. We all know what happened to gold and silver back in the 1970s. Cracks appear in subprime borrowers miss loan payments amid recession threats. Now, I'm not here for fear porn. I want to put brackets around this and say, I just want to point you in this direction that we're beginning to see some weakness. This is not catastrophic. This does not mean that stocks are going to drop like a rock tomorrow, by no stretch of the imagination. But what we are seeing is year over year. I would forget about March of 20. I would forget about March of 19. I would concern myself with the year over year 21 versus 22. Across the board, you have auto loans and leases in dark blue rising year over year. Credit cards rising dramatically year over year. These are delinquencies. These are delinquencies past the 60-day past due amount. These debts are probably not going to get repaid. At 120 days, they get charged off and they go to attorneys for collection. That's it. They write it off their books. So if you're wondering why are the banks so weak right now, well, you had down yields last week, weak stock market, and now you're seeing loan loss reserves having to get jacked up because you're going to see charge-offs. Personal loans and lines of credit, seeing a big move in delinquencies year over year. Now, to put brackets around this, this is nowhere near as bad as what we saw back in 2020, and that was the COVID recession. And it's nowhere near as bad as it was back, well, except for auto loans and leases. Nowhere near as bad as it was back in 2019. It's almost there, but not as bad. So we're not here to fear anyone. It's just to point you in the direction of, okay, things aren't trending well. When you have economic growth declining and you have inflation rising, companies have to look to cut heads. So what's going to happen? People aren't making money to pay their inflated costs of food, energy, rent, etc. And they're going to their credit cards. They're taking out personal loans. They're defaulting on their auto loans. They're losing their jobs. So this is not a good mix for the economy. All right, so I want to talk about this a bit. We're seeing a lot about droughts. We're seeing a lot about the unavailability of fertilizer. Yes, it's gone up dramatically, but it's still available. But yes, it's causing havoc in the supermarket. But I want to point to something that I'm not saying you should sell your commodity names. I own commodity names. I'm not saying you should sell your commodity names. I'm going to point you to a couple of charts in a moment because sometimes either the narrative gets hijacked by those that profit, or people just get so caught up in recency bias of going to the supermarket, prices are still high, and they stick with that narrative until they lose sight of the macro view, that higher level view. And we want to talk about that. So here's another one. This is a farmer. We're in a crisis. American farmers warn of impending food shortages. Okay, so if that's the case, let's take a look at a chart of wheat. This is a quarterly chart of wheat. I want you to take note of something. We are very extended on the price of wheat. Can we have a super cycle move up higher? Yeah, but we are very extended. We are very overbought. This is not going to end well. Will it end tomorrow? Will it end next quarter? I don't know. I don't know how to have a crystal ball. But if you're long of the wheat stocks, just keep this in mind that this is out there, that we are extended. And if you begin to see a double top and a breakdown to new lower lows on a daily time frame, you may want to take some money off the table. I'm not saying go in and you got to sell your wheat stocks, you got to sell soybeans or corn tomorrow. I'm just saying pay heed. Note that this is happening on a quarterly view, on a monthly view. Come on, you're screwing me up here. Monthly view, we have RSI at 84.40. Commodities go in boom and bust cycles. Can this continue up higher? Absolutely, in the short term. But when you take a look at this chart here, you have to appreciate this is unsustainable. It is unsustainable and it won't end well. So if you're in the wheat ETF, use a trailing stop loss order. Let the market take you out, or do as I said earlier, watch for a double top. If you break down to new lower lows on a daily time frame, then get out of your position or at least lighten up some. When you're looking at wheat on a daily time frame, we're pulling back here. This doesn't mean that you should sell. It means that what you should be looking for right now is, okay, could this possibly be a double top? Now, what you want to look for here is a bounce off of this lower band of support where we're probably going to go. We're probably going to then rally back. The question is, do we break out above 12.42 per share on the wheat ETF, or do we put in a lower high and break to new lower lows? If we get that, I would need to say I would be stopping out of my position. So just keep an eye on the daily price action, because obviously the daily chart is going to reflect weakness before the quarterly charts, and the monthly charts are going to do that. Soybeans, a similar deal here, not the same as wheat. Wheat's a little bit more extended. Here, this is what happened to same scenario with soybeans a few months ago when we were very, very extended. It didn't end well. This is a pretty significant correction. Now we have bounced back, moved on to new higher highs, and it looks as though, guess what? We're probably going to break out here. So simply because you're booking profits because you're overbought doesn't mean that you can't get back in at a lower price. Corn, quarterly view. Uptrend still good, but guess what? Quarter over quarter, we don't have a new quarterly high yet. So it's not that we can't make a new quarterly high. We still have plenty of time for it to do so. In fact, we're down. But the first indicator that you may be pausing on a bull rally is you stop making higher highs. All right, and then you begin to break down to new lower lows. So we're not there yet. We could easily break out and make new higher highs. Just a word of caution. Now, taking a look at a monthly chart here. Sorry, this is mislabeled. I apologize. What we were looking at was a monthly chart, folks. I'm sorry. Let's take a look at a quarterly chart. Yeah, somewhat extended here relative to the third standard deviation Bollinger Band. So that's in red. So for those of you that aren't familiar with the third standard deviation Bollinger Band is, I'll keep it simple. You're not supposed to be leaning into it. If you are, you're probably not going to spend much time there. So think about backing off. If you're overweighted position, think about lightening up some, because it generally doesn't end well. Let's go to some comments. You guys are busy today. Does 2 quarters of negative GDP means that we were in? So that's the definition. Most of the times, you don't even know that you're in recession until you're in recovery. So it gets reported after the recovery begins. So in all probability, we are in recession right now. What happened here is that, you take a look at, here's the Dow Jones, right? When you look at 2020 right here, this is where COVID was, right? That sell-off, that major sell-off. We were already putting in lower highs on RSI. We were extended on Stokes, and we were beginning to roll over. What this was a debt-fueled rally in equities. And the problem is that there's no more, right? And in fact, they're threatening to roll off debt off their balance sheet, meaning the Federal Reserve, effective June 1. So all of this, there's no new checks going out in the mail to replace all the rocket fuel that went into equities. And in fact, you're going to see job losses. So if that's the case, this must revert to the mean. It has to pull back. What the Federal Reserve did and the federal government did is they issued a lot of debt and they pulled all the demand from the future to present. Now that bill it's time to pay that bill because there's no more demand. We're seeing demand destruction. Milai, please. I see it will outpace Amazon. Milai. I keep hearing about this company. All right. Bob, what's your year-end price target for gold? I really don't have one. I'll be honest with you. The past few days, the past couple of weeks on gold, I've been pretty bearish. I've been Harry Dentish these past few days, and I'll go to the chart of as to why in a moment. But on a relative basis, I will say this, and we're on the chart I was going to talk about anyway. On a relative basis, this is the Dow Jones versus gold. The Dow Jones is in Candlestick, gold is in gold. And you could see for the first time since around January of 13, gold is outperforming the Dow Jones Industrial Average. So we were doing, oh, I'm sorry, we were doing it back here, and then we had that debt-fueled rally. And then we got concerned about rates moving up higher, gold sold off. So now we're back above, outperforming the Dow Jones Industrial Average. So on a relative basis, gold is outperforming the Dow Jones. If you want to take a look at it, this is a quarterly chart. If you want to take a look at it versus the S&P 500, outperforming the S&P 500, you can bet your bottom dollar it's outperforming small caps by a wide margin. So for those out there that are saying gold's a relic of the Stone Age, they're out of their mind. Tell them to look at the relative strength of gold versus every single equity out there. It's outperforming them all, index-wise. It's outperforming them all. Here, take a look at the ARK Fund. It's a joke. Look at how vastly gold is outperforming. So obviously that won't last forever. This is a cycle, and it won't last forever, and we'll revert to the norm at some point in time in the future. But right now, it's the perfect storm for gold. Now, other commodities that we're watching here, quarterly chart of the DBC, the commodity index. And the reason why I'm focusing so much on commodities tonight, folks, is that we have the PCE indicator coming out on Friday. If that comes in weak, you're going to see a lot of selling of these commodity names. So get ready. These are the events that are out there that could influence the price of commodities, at least in the short term. And just understand where they are. Commodities on a quarterly time frame, strong. On a strong but unsustainable. Quarterly chart now, monthly chart. Strong but unsustainable. And take note of all the topping action for the past 3 months on the DBC. We did not put in a new monthly high this month yet. So what this is telling me, these wicks on this chart are saying you have sellers above. There is distribution going on. Plus you're at resistance and you're extended. Volume is still good. So while I'm not calling an end to the commodity rally, I'm just saying, be careful. Be careful here. I saw some questions came about after Friday's close. Have we seen a bottom in equities? My answer is no. And that's me putting myself out there with futures. Where are we at right now? S&Ps are still holding gains. They're probably going to move up higher. Nasdaq still holding gains, probably going to move up higher. VIX is weak. The dollar is weak. That's great for gold. Let's check back in with gold. Gold is really nice tonight. I would like to see us take out the 1860 mark on gold this evening. And what was the high of the evening already? High of 1858. We've already knocked on the door of 1860. Very strong open here. Loving it. Yields are popping up higher. So if you're looking for something that could mute any rally in growth stocks, in particular, 10-year yield. Okay, so like I said earlier, Trip Qs were down about 3% at the low on Friday. We rallied back, closing down only about 1/3%. Is that the low? No. Simple. It's not. And the reason is, and I'm going to have good news in a moment as well. It's not all doom and gloom. The reason is that when you take a look at the VIX, this is the VIX going back to 1998. So in this chart, you'll see bubbles from yesteryear and how they ended on the VIX. Financial crisis, COVID, dot-com bubble. So let's say the average here is around 60. All right. Quick paper napkin math, 60. I could be up by 10 points for all I know. The point is that it's probably higher than that. Folks, we haven't even shown a 40 handle yet on the VIX during this sell-off. This has been a very, very almost managed sell-off in equities. So I'm not going to be convinced that we have a bottom in the markets until a few things happen. One, we hit historical support. We're not there yet. Two, we have VIX at a bare minimum with a 40 handle on it. Three, the skew index. For those not familiar with the skew index is, it's an indicator of the skew of options that are out of the money being purchased by speculators. So if you get heavy put volume, you're getting a skew on puts, they get jacked up. And you generally see that at market bottoms, just like here. 2002, we bottomed. January of 2009, we bottomed. The skew hasn't even broken out yet above its 20-period moving average. So the VIX hasn't confirmed a bottom yet. Skew hasn't confirmed the bottom yet. What may have confirmed a bottom, but we are still in an uptrend, is the put-call ratio. But I could see this jacking up higher because we did put in a peak only a few weeks ago, yet it appears as though that we're probably going to take another move up higher here. Indicators are all very, very strong. Note how it trades inversely of equities. My price targets. I'm net short of the Qs. I have a long position on. I have a short position on. I'm selling options against the Qs. So I really don't care what the Qs do. I just care about time decay and the very expensive options that are being sold by me on the Qs. So here's the good news is that we have been down for 7 weeks in a row. The probability of us closing down lower again this week is highly improbable. I don't remember the last time where we had 7 consecutive weeks downward. I mean, here was 2020. This was a crash. That wasn't even 7 weeks. 2018, this is the taper tantrum. That wasn't 7 weeks. But here we are, 7 weeks down in a row. It's highly improbable that we are going to close down in the week. Can we? Sure, but it's using the odds, it's improbable. We're probably going to close higher this week. So I'll leave you off with a positive comment. Why don't we just sell calls, Bob, if we are bearish? Because there's all right, so the skew. There's a couple of reasons. One is that it goes back to a few things. 7 consecutive weeks down. So I have X number of contracts that I sold as calls. That makes it my short position on the triple Qs. They're deep out of the money. So I can, if the Qs rally this week, I don't care. It's okay. It doesn't bother me any because I'll make up for it on time decay and I'll make up for it on the calls, the puts that I sold deep out of the money. They were very, very expensive to the buyer who I sold them to. What you're going to get if we get a rally this week is IV crush, implied volatility crush. The value of those options are going to evaporate if we get a bear market rally this week. Now, will my call side suffer? Yeah, it will. If the Qs rally, yes, absolutely. The however is what's going to mute that impact of a rally against the short calls that I have is the fact that implied volatility is going to contract in the options. Also, I'll lose it on the delta, meaning the amount of, I don't want to get into deltas right now because not everybody here is an options trader. And I'll also make money on the theta decay. Theta decay is your time decay, and those options expire on June the 10th. So I like to have a hedge on. I didn't want to have to put on a hedge, but I did it because of the factors I just mentioned. So it's best to have a hedge. I feel comfortable moving into Monday with the futures market moving up higher, knowing that I have a hedge on my short position. And now we're gaining steam here on the S&P 500. Zero deaths. What was that for monkeypox? The stupidity of the CDC never pays attention on gene editing throughout. I keep LABU. That's right. We love our LABU. How much is that compared to 2008? I just went through a whole bunch of charts. So what were you looking for a comparison on? Bob, do they still have the same mortgage lending practices by the banks from 2008? No, they don't. Dodd-Frank changed all that. The big short type risk, not as much. No, the banks are they are more they're more capitalized now than they were back then. You know, back in 2005, I was shorting. I wasn't shorting. I was sniffing out the fact that everybody knew that these teaser rates were going to expire in 2007. Nobody wanted to pay attention to it. I was short the home builders going into the financial crisis. So you don't have that level of a debt cliff coming up right now. You do with the federal government. That's the major. What sent the market lower in 2008 with the banks being undercapitalized. What is going to send this one down big time is the federal government. They're going to have to blow up their balance sheet sooner rather than later. And inflation is going to it may come in a little bit, then it's going to go skyrocketing higher. So my bearish comments this evening on commodities is not a long-term call. I think that the Federal Reserve at some point in time is going to have to come back in, begin the printing presses yet again, and that's going to take commodities, gold, and they are just going to skyrocket. Because remember, QE2 was twice as heavy in buying as QE1 or money printing. QE3, which they never named it as, twice as much money printing as QE2. The next time around, they're going to have to double it up yet again to have the same impact as the prior QEs did. It's going to be enormous. And you got to buy stocks. I live in farming community, central CA. Every large farmer in the area is planting fence. So they're planting, and I think it just depends upon the quality of crop because of the fertilizers. I'm no farmer. I don't pretend that's a real job, one that I could never ever do. So my hat off to any farmer that's out there. I heard. Oh, they're overplanting due to an anticipated price. Gotcha. So you have production coming online, and that's a good anecdotal tell that, you know what, you may see production pick up, and when they start harvesting, if those harvest numbers come in higher than expected, that could be a catalyst for commodity prices to come in, at least on agriculture. I heard the 35-year interest-only adjustable rate mortgage. Okay. I'm not familiar with that one, but I'll take your word for it. Current Fed needs U-turn and pay bondholder in ounce. The tier 1 underground gold should be as sinking fund. People need the real medicine for inflation, gold, silver. So hey, the Russia's going towards it. I wouldn't be the least bit surprised to see China going towards it. Paul Volcker's USA is not here. We are a debt nation. Cannot, of course, they can only dream of what Paul Volcker was able to do. We were a creditor nation back then. Now we're a debtor nation, and we can never normalize rates ever again. Bob, what do you see for vehicle prices? Vehicle prices, according to the Manheim auction, are actually coming in. They're contracting. If you look up Manheim auction prices, you'll see a chart where the prices are rolling over. There's somebody sent me it was an inflation adjusted sticker for a car price. They just added $1,000 for inflation on top of the car price. Falcon, I feel the market makers know how to make the markets down slowly, like how to boil a frog by starting the cold water and not trigger a market rally. Hold on. Yeah, so it's been going down in anticipation of what the Federal Reserve was going to do. Note how they really haven't begun to fight inflation. They've only raised rates by 0.75 of a basis point in the past year. In the past, 6 years? 0.75 of a basis point. That's bananas. So they're not fighting inflation. They have yet to begin rolling debt off their balance sheet. And in fact, their balance sheet rose last week versus the prior week. We went over that on Thursday Night Futures Live. So that's why they're pushing it out. I get what they're doing, and I don't necessarily disagree with it. They're looking for demand destruction. They're getting it, and they're bringing in equity prices. What about crude? Crude is I had this up here. I was going to talk about it. Crude is very strong. I mean, it's broken out of a multi-year downtrend channel. This is a solid chart. I think that crude is the canary in the coal mine here. If crude prices continue up higher, Crude flows into everything, rubber products, building materials. So if this continues up higher, you're going to see more and more demand destruction. So it looks as though at current monthly chart, oil looks very strong, probably going up higher. What's up, brother? How's it going today? Pretty good, Rick Roofing. Should I hold SARC unchanged, but keep SPU on the back mirror? Be careful with that SARC. All right. Remember, 7 consecutive down weeks on the trip Qs, unheard of. We're probably going to get some sort of a rally there. Rick Roofing, RBLX, BZ, gold. That's Barrick. Playoff of PGA, leader collapse on 18. Really? Really? And Tiger backed out too, I heard. Jesus. Yeah, Big Rick. All right. We have limited time. So let's go over some chart requests I have in the members area. Let me check. We have Amazon for Thomas, RRC for Larry. All right, let's do it. Folks, we're going to be using TrendSpider, 35% discount code below if you want automated technical analysis and if you want to trade with the big boys. All right, so let's get rid of this. Amazon. Let's begin with a weekly chart. No new weekly low last week, but there was a rejection of a breakout at the 2250 mark, and we closed down slightly below. What I have overlaid here is on this weekly chart, I have overlaid monthly support and resistance as well. I'll take it off. You see the dash lines move away. I'll put them back on. And then they're back. This is monthly support down here. We closed down slightly below it. I think that they'll probably spike Amazon up tomorrow, daily view. Now, the daily chart, here's that monthly support level. Again, we're down below it. I wouldn't be a buyer here until we broke out above this upper band of resistance. I'll share this chart with you. And our alerts set. Okay. What else are we going over here? We have, so Amazon, I wouldn't touch it right now until we close above resistance. I shared the chart with you. It should have the price on there. RRC. Weekly view. Weekly chart looks good. We bounced off the VWAP. We closed above it. Closed above a series of moving averages. We have good support here. I'm liking it on a weekly time frame, range resources, daily chart. So here's your buy signal here. Close above resistance. I'll share this chart. Amazon I just sent through. RSC I sent through. This is looking good. I would just wait for the breakout above resistance. Add more after you get a retest and then a continuation breakout. Chart looks good. Let's take a quick look at a monthly chart. Monthly chart looks good here. Nice pullback, holding support. RSC. Barrick Gold. So the gold mining stocks last week showed a lot of relative strength. You had equities which were down on the week. Gold stocks bounced. Bullish key reversal bar on the week. Love it. So Barrick can be bought. If you're already long, wait for your breakout above this upper band of resistance, add more. The only thing I don't like about the gold stocks, and that goes for gold as well, Stokes are still declining on a weekly time frame. I don't like that. That puts into play the possibility of an intra-week head fake, meaning Monday, Tuesday, you rally, by Friday, you're negative. All right. That's what happens when you have Stokes trading down below 50 and declining on a weekly time frame. So the later you can wait in the week to ensure that any rally that we're seeing is going to close there, the better. Daily chart. You have a bit of resistance immediately above. I'd be a buyer on a close above 21 bucks a share. If you're not already long, you would want to add there. I would add more on a breakout above this upper band of resistance. Then it's going to be game on. We start going from lower lows to higher highs. It's game on. I shared this chart of Barrick. You have that now. You own it. What else do we have here? VZ, Verizon. What kind of divvy are they paying now? $5 divvy. Is it time to buy? All right, so the question I have to ask myself, is this a bull flag setup or bear flag setup, I should say? This is not what I want. I would keep a tight stop on it. It breaks down to a new weekly lower low below the lows of last week, which is 47.76. I would stop out because on a daily chart, that would be a horrible breakdown. Daily chart, though, I got to tell you, it's looking pretty good. Higher lows, you break out above 40, say $50 a share. In all probability, we are going up higher. I like this setup here in a daily time frame. I'm a little bit suspicious of the weekly chart. Thanks, Rick. Franklin, have a great night, my friend. Thanks for being here. Yep. Rick, 5.17%. Yep. Thank you, sir. Huh. The teledoc, right? Yeah, yeah. That'll be a buy if they push monkeypox now. Criminals, bunch of goddamn criminals. RBLX, Roblox. It stopped going down and it broke out last week. You had a breakout last week, despite the fact it closed down in the week. It broke out bullish. Broke out on the 18th, consolidated, looking for a continuation breakout. I think this is a buy, tight stop under Friday's lows. If it breaks down below Friday's lows, it's going to pull back and retest this breakout point. I'm going to create an alert there myself because if it happens to do that, I'd be a buyer. All right, so our alert's set here. I want to check out the seasonality. I'll share this chart out. I want to check out the seasonality. It's in the box, Falcon. You got it. All right, so seasonality. There's not much data here to go off of. Nah, I can't use seasonality. There's not enough data. Okay, that's RBLX, MELI. We're going to leave it off with this. I'm going to go back to the futures. Shane, hi. I'd like to hear people going long finally. Yeah, there's no reason why there can't be a counter trend rally. I think that we've hit support levels where you can get a short covering rally statistically. Again, Q's down 7 weeks in a row. Highly improbable that we're going to get a 8th week down in a row. So it doesn't mean we can't consolidate trade sideways, but I get the feeling that they're probably going to try to rally it early in the week anyway. Does it close at the highs of the week? I don't know. I'm not that smart. But in all probability, we're going to get a rally this week early on. Rick Roofing, smash the like button. All for an awesome channel and host. Thank you very much, Rick Roofing. Appreciate it. Okay. All right. What else do we have here? I think that's it, right? Did I go over? I did. I did Amazon. Okay. All right. Let's check back in with the futures. So E-minis up top here are at session highs. Yields remain higher. The dollar is really, really weak. That's a good thing. Let's take a look at the Nasdaq 100. Nasdaq 100 up nearly a percentage point now. Very strong. At session highs. We're approaching resistance from Friday. We'll see what happens. We're very, very close. Let's spend a moment here. I want to see if there are any program sell orders up there. For those not familiar with Thinkorswim, this is an alert marking resistance. All right, that'll fire off. We'll come back to it if it fires off. Gold. Let's see if we got any new buyers in here. Up nearly a third of a percentage point. VIX tried to catch a bid, was rejected. VIX very, very weak, extremely weak. Russell 2000 futures, very strong, up over 3/4 of a percentage point. We'll leave it off with silver. Silver really strong here. We're up over 3/4 of a percentage point on silver. And this is being driven by, remember the charts we went over earlier. We were talking about GDP going this way, inflation going this way, the dollar's now going this way, and gold and silver prices, they're going to go this way. As long as this dollar remains weak, we're going to get a bid on gold and silver. Contrarian bear market rally or retest next week. I think we get a continuation bear market rally. So we'll probably get a continuation rally this coming week. I don't think that we're going to retest, but I do not think that we've seen the lows. Not yet. Too much uncertainty in the market. I don't think any rally will stick, but I'm in the bear. Yeah, we got to keep in mind the Fed's going to be rolling off debt off their balance sheet unless they punt. If they kick the can down the road, well then, game on for the markets. But remember, inflation is going to scream up higher, especially now. Remember, it's great for us as traders of gold and silver, the miners, for the dollar to correct. But remember what the dollar does when it declines. It reduces the buying power of the American consumer. So those goods that are made overseas, they become far more expensive. And for the producers here in the United States who need to buy parts overseas with a weaker dollar, they have to raise prices as well, even though they're producing domestically. So this is not a good thing. So we are in uncharted territory. We are really in uncharted territory. So do I think that this is done? This correction is over? Not by any stretch of the imagination. Will we get a counter trend rally here? In all probability, yes. With that, folks, thanks for being here. Hit the subscribe button. Have a profitable trading week and enjoy the rest of the evening with your family. Thank you very much for being here. I'm humbled. And everybody have a great night. And I will talk to you throughout the week. Be well.